Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. So first of all, what do you need to know as we go into a fresh week here? Well, we have seen essentially Wall Street get whacked overnight by of course the crash in oil prices, over a 30% move to the downside, in fact overnight, for crude oil, and this of course provided a nice breakout and a gap on many other markets off the open as well. In fact, we've been able to capitalize on that via precious metals, where we're able to bank 620 points on platinum on the open and also over 90 points on silver. Now, if you cast your mind back to this time last week, we discussed with you where we were selling short on gold. So we had a sell short position on where we had sold at 1609. In fact, we hit our profit target. We banked 200 points on the sell short side, protected the trade. And then what did we see on Tuesday? Of course, we saw the Federal Reserve, they cut interest rates. And with that, we saw that significant surge higher on gold, and also then switch position, and we've capitalized on that breakout via platinum and silver last week as well. Now, it's very important more than ever right now to be nimble in the market, so you need to readjust when we have new developments in these markets. As I mentioned at the beginning of last week, we also caught over 1,000-point move on one of the derivatives to the energies, which was a lovely gap fill opportunity at the beginning of last week. Now, the way that we've actually positioned so far today is we've actually caught a nice 7% move to the upside on natural gas so far. We've also seen, of course, that dramatic decline in oil prices. Again, we're seeing another rollover on the S&P 500. The Dow Jones Industrial has crashed by over 2,000 points on Monday, as we've seen over a 20% slump in oil prices, and of course the rapid spread of the coronavirus, which is amplifying fears in the global markets right now. So with that, let's actually move over to the charts, and I'll tell you exactly what we're looking at as we head into a new week. So first of all, just going back to gold here. So as I mentioned at the beginning of last week, we were capitalizing on a sell short. We banked 200 points, and then in fact on Tuesday, as we started to get into the US session, this is where we saw the Federal Reserve with a emergency interest rate hike, which essentially stunned the markets. It wasn't a pre-planned interest rate hike, and with that we saw of course that significant breakout with gold. We then exited the remainder of one of our positions there at entry price after banking 200 points, and then we started to build our positions on silver and also platinum, which we banked on the open as well. So we actually saw gold break out overnight, tap 1700, and then we've seen a pullback back towards 1657, and you can see where we're mid-range right now. In fact, that summarizes really what I'm looking at in the short term here, which is resistance to be coming in at 1700 and then support around the 1660 zone for now. So you can see where we're ricocheting between these levels right now. For gold, we're middle of that zone at the moment. So essentially what we're seeing is resistance and selling coming in back at the 1700, support again around the 1660 to 1650 zone. So this is where we're essentially looking for bids at the moment. Each time we retrace back towards that level, looking for buying opportunities to then take the range back to resistance, and also at the 1700 level, look out for resistance at that zone right now as well, where it could offer a nice opportunity to bank profits and potentially go for short-term range-bound trades again back to support. Now, this would change if we're able to break out of these layers. So if we were able to break below that 1650 zone, then this is of course where we can get quite bearish and we could start to have a more significant pullback here on gold. And on the flip side of that, if we were to break out back above the 1700 zone, break above 1702, then it does essentially open the door up to the next magnetic levels, which would of course be 1750 for gold here. So you can see right now where we're remaining in between these ranges. The gold to silver ratio, it hit over 100 to 1 overnight, which is incredible. So this is the highest the gold to silver ratio has been in over 30 years. And in fact, what we did, we capitalized on the breakout, not only on silver, but also on platinum in the latest week as well. We had some really nice tight entries on platinum last week, where we caught this huge breakout on Friday, over a 300-point breakout, and then again the gap on the open. So we banked over two trades, 620 points. I'm glad we did and we came out of those positions, because we have seen platinum roll over. It's back at support, back at $862 per ounce. I do note that in the latest week we have seen an increase in sell shorts on platinum and a decrease in the overall net longs. This has also been the case with silver as well. So in the latest week we've seen another decrease in net longs and an increase in sell shorts. That said, there is a huge disparity between gold and silver prices right now, with the gold silver ratio hitting 100 to 1. You can see even today silver didn't really spend too much time at around $16.55 per ounce before getting a bid, back to $16.99. So I want to see really if silver is going to roll over again, have another retap back towards that support zone again of 16.50, or whether we can hold here around the $17 per ounce level and make another reattempt to get back to approximately $17.50. This is where we banked off the open at $17.55 per ounce. So we built positions over the last week. In fact, we built 4 positions last week, banked all of those on the open. We've subsequently seen a retracement, and now I really want to see whether we're going to now roll over, retest support, which could offer buy opportunities if we see buying evidence come in at that layer, or whether we're going to be able to catch a bid here and get back towards the 17.50 level and then see how the price responds to that zone and whether we can catch a bid at that level. But at the moment, as you would have noted, with this large liquidation that we've seen across the board for many equity traders, generally speaking, that does have a knock-on effect with many traders then start to liquidate their other positions, especially precious metals such as gold, when it hit the 1700 level overnight, and that can put further pressure on the metals. And we know hedge funds and money managers, they're building up their sell short positions in the precious metals at the moment as well. This is what I mentioned last week, but then of course on Tuesday we saw that emergency interest rate cut, which changed the trajectory of gold last week. Essentially, we saw another breakout all the way back up towards that 1700 level, which we've capitalized on via platinum and also silver. Now moving over to crude oil, which is now down 29% over the month of March so far. So we've seen over a 20% gap on the open lower, and you can of course see where we actually broke all the way down here to $27.33 per barrel. Currently, crude oil is at $32 per barrel. What do you need to know right now? Well, we have seen hedge funds and money managers, they increase their net sell shorts in the latest week. We have also seen now that over 81% of retail traders are long this market, trying to catch the gap fill from the 1,000-point move that we saw off the open. Again, this is where a lot of traders, they get it wrong, especially where we saw this significant gap on the open. Many traders looking at that for a gap fill off the open. And what did we see overnight? Essentially, the price came all the way down and then it sold off by over another 500 points from where it gapped lower. In fact, the peak of that was about another 700 point lower, that it actually broke down to $27.33 per barrel. Now, we took the opportunity there, in fact, off the open, where we had seen a lot of data points marry up, and that was to get into natural gas right off the open, which is now up 7.4% on the day. We continue to manage this trade. It's looking really solid at the moment. But bringing you back to crude oil. So crude oil, the price action that we're seeing right now, you can see it's dipped back below $32 per barrel. Ultimately, the scenarios here with the coronavirus and also the increase in supply as a result of no resolution between OPEC and Russia last week is not a massively bullish scenario for crude oil right now. And you can see that where we've got a bit of lackluster momentum today, the potential to start trying to fill the gap. But then, of course, we've seen selling pressure come back into crude oil. Right now, it's sitting around $32 per barrel. There are many traders out there that are trying to pick the low at the moment with crude oil. They're looking for a gap fill trade, and they also, especially from a technical point of view, would have got triggered on a break back above the highs from yesterday, from the Sunday open. So you want to keep a very close eye on these developments right now with the coronavirus, and also particularly what we're seeing right now with the potential for an increase in supply, of course, coming out of OPEC. Once we do see the output restrictions lifted over this month, we could then start to see oil under pressure, continued pressure essentially, and this is getting priced into the market, and as a result, we've of course seen that very significant gap lower off the open. So just be aware that you might think it's the contrarian view right now to be buying into oil. It's absolutely not. You've got over 81% of retail traders who are long this market right now, and this is the sort of trade that you want to be grateful that you were not long going into the weekend, because a 1,000-point move there against you on the open is not what you want to wake up to. So I'm sure many of you were not long here oil going into the weekend, and hopefully you capitalized from the precious metals breakouts that we saw, not only on platinum here with a significant breakout of the open, and also gold and silver. Really, this volatility that we're seeing in the markets is perfect for trading. This is what you want to see. You want to see markets moving a lot of points on a daily basis. This really enables you to capitalize on these moves from energies through to the precious metals. This is exactly the sort of volatility that you want to see in the markets in order to benefit. As I mentioned, we've already managed to capitalize on a 7% move overnight just for natural gas here. We were able to capitalize on those breakouts and gaps higher, for example, on the precious metals, platinum in particular overnight, banking us 620 points. You really want to be approaching the markets with a very clear edge right now. This is going to be important to help you to get the sort of returns that you want in the markets. And as always, you want to stay very nimble right now. And of course, you don't want to rely purely on technical analysis. You need more information than that. So of course, if you would like to become a member of the Gold and Silver Club and join a community of successful traders and learn a research-driven approach where you're not just utilizing technical analysis, you're going to be looking at a lot of data points, a lot of research, the cycles in the market, alongside what the hedge funds are doing versus the retail traders in the market. I've just given you a great example where over 81% of retail traders have been long oil, not only this week, but the previous weeks as well. And of course, we've seen over 1,000-point gap lower against many traders in the market there, whereas hedge funds and money managers were selling short into energies in the latest week here. I've also mentioned the positioning on platinum with hedge funds and money managers building up their sell shorts in the latest week as well. In fact, it's been interesting in natural gas because we have seen many hedge funds start to reduce their natural gas sell shorts, and that's helped, of course, this natural gas market propel higher. And we're also at a very seasonally bullish time of year for natural gas at the moment too, as we move into the month, or we transition through the month of March as well. But the main point there is that you really want to have an edge in the markets where you're also looking at fundamentals, geopolitical news. You're also taking into account volatility, what the daily ranges are on particular markets, what the weekly ranges are as well. This will all help you get a bigger picture, utilizing then correlations, breaking news items, and also our in-house research intelligence that can help really give you an edge in the markets. So if you would like to join a community of successful traders, there is an opportunity for you to do so. As a member of the Gold and Silver Club, you get access to our exclusive live trading room webinars. You also have access to real-time trade alerts, trading research and market insights, access to our private Members Academy membership site, and also access to support and one-to-one mentoring. For more information about the service, please just go to www.jointhelivetradingroom.com. The link is also below the report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.